Welcome to Keeping Up with Trends. This is Fred Razak, Senior Trading Strategist here at CMTrading, and we're joined with your host, Sergio Davids. What do we have planned for today? We're in the midst of so many things that are going on around the world.
Hey Fred. Well, like you said, there's so many things going on. It's big earning season. We had Tesla, about a week ago in Netflix. And today we can talk about Microsoft and Google's earnings, which were released July 25th. But before that, I wanted to pick your brain regarding Twitter's rebranding. I mean, it came out of nowhere. You got rid of the bird. It's an X now. It's just a lot of people, are saying, why get rid of such a huge brand cachet, that you've built up over a decade? What are your thoughts?
So it's a really gutsy move, I think. I mean, our association with Twitter,
Yeah,
um, it's a certain brand. It's a certain, it becomes like, unless he's trying to do something else. Okay, they. It's interesting that you say this because when I started out in the fashion industry, and there was a guy who lived in my community who was in the industry. He was on the other end of it. I was on the other end of it.
yeah,
I was on the backside of providing piece goods, and he was a manufacturer. So ostensibly, he would have been potentially my customer, but we were different. We were dealing in different categories of items. And he said something to me that was very interesting. He said every 5 years, he said, he regretted that, and they had a really good label. And he said every 5 years, you've got to rebrand. You've got to come up
really?
with it. Yeah, every 5 years.
Look, I can understand, changing your brand strategy and sort of rebranding in parentheses, what you are and what you're aiming at. But to get rid of, your logo and your legacy, I mean, like you said, it's a gutsy move. I don't know if it's the best move,
So
but
unless he has like bigger, a bigger uh platform for it that he wants to use it for. Like, if he's just replacing it just to replace it because it fits in his model with everything else that he does, like the X space
I
and
was about to say, the man loves X. He's got Tesla Model X, you've got SpaceX. I think one of his kids is also named X. So,
that's
and I
what
mean, X.com,
that's
was his baby
not,
way back when. So, yeah, he's got a fixation for the letter X.
so unless he sees that he's taking it to a different level and thereby he wants to rebrand it so we're not just associated with the old version of it,
Yeah.
that would be something that I think that would justify the rebranding of it.
Look, it kind of worked for, Meta slash Facebook. They got rid of stigma attached to old Facebook, and it helped a lot. Meta's in a way better place than it was. So, yeah, just interesting times.
It's
Uh,
interesting. Yeah.
yeah, moving on. Microsoft. I mean, I know you're a fan, and they, if you were a shareholder, they've been doing insanely well this year. Hitting record highs. But I'm
Yeah.
surprised that they met their Wall Street estimates, and yet the stock's down.
So
What
this is
gives?
yeah, so this is where you become, this is what I call creative accounting.
Yeah,
Revenue is down. That's the most important number.
yeah,
How much sales per quarter is up or down? That's the most important number. The fact that gross income is up, or uh, that their earning per share is up. That's really, you know really not as important as revenue numbers. What I love to hear is profit margin. Profit margin was up big. Then that they're doing clever accounting.
Hmm.
So a couple of things. I mean, realistically speaking, we're still in the midst of a post-pandemic atmosphere. I mean, I know it's what is it, 3 years post,
Yeah.
but it's still it's us coming back to levels that we need to justify ourselves where we are right now. And companies are hurting on Main Street still. So I mean,
I th-
it's yeah.
I think inflation and obviously interest rates has got a lot to do with it as well. It's expensive to import, especially computers. And I mean, I know Microsoft's bread and butter is moving towards, it's online and cloud-based servicing, but I mean, it's still got a lot to do with, software and hardware. But that's gotten very expensive of late. So it must have hurt, in their revenue, and it shows.
Well, it's also that businesses are not expanding, right? There's less new businesses being brought into the
Yeah,
work world because things are so expensive right now, and because the economies are kind of taking a back seat for now. So
yeah,
this is a normal cycle for Microsoft. I think. I don't think this is something that's and until we start using a different product, I don't see them going away. This dip is just that. It's a dip.
just a dip.
And thinking about, 5, 6, 7 years from now, with what they'll do with AI, then potentially we could be way undervalued right now.
Yeah, I mean, they're making big strides, in AI. And similarly, on the same day, Google, also released its earnings. And, yes, they were on the back foot, when ChatGPT, exploded, but, they've got their own product now, Bard, which was also taken off. Um, and yeah, it'll be really interesting to see where Google goes with AI.
I think out of anybody, I think Google has the upper hand when it comes to cloud servicing.
Yeah. Well, I mean,
Anyway,
they own all the data, you know. I mean, quite literally.
so again, it's just maybe a dip in the market. It's a dip. It's momentary dip. I think AI is still. What do they call their AI product?
Google's, it's Bard.
Bard.
Yeah.
Yeah. So I think Bard is someone we're going to have to get to know.
Yeah,
It's
it's still in its infancy, you
so
know.
they see maybe a year or 2 years away. What the true applications of it are, and they have yet to share it with the rest of us. So I think that speaks a lot of you know volumes as in terms of what the potential could really be.
Um, and then, well, let me ask you, if you, I mean, I know, you're loath to sort of invest, on the day of earnings. You like to see where the trend is, right? If you could, would you snap up shares of Microsoft and Google now?
So that's a hard one. I mean, their stocks are so expensive,
Yeah,
but again, like I said, if you see upside potential in AI and it's
right.
really going to hit the market on those levels, then these numbers that we're trading at, these intervals that we're trading at right now, might be quite depressed. There could be tremendous upside to it.
I think if you can think about this as Gen 1 of AI, and it's this prolific and this destabilizing. Imagine what Gen 2, Gen 3 is going to be.
Yeah, that should be very
I mean, that's
interesting.
scary. You know, Speaking of scary, FOMC coming up. What can traders expect?
FOMC. Okay, so everybody's really focused on this because this is, I think, going to be a big turning point. Both because the FOMC rate statement is going to give us direction whether or not inflation is in check,
Yeah.
and
I th-
if it's going to mean that they're going to decrease interest rates, that means that businesses are going to start, getting a little bit more involved, and we're not just going to see um, gross margin or profit margin increase. We're going to see actual revenue increase.
well, let's outline some scenarios, right? I mean, I'm not going to speculate, you know, what they'll do, but let's speculate, if they do X, what'll happen. So, raising interest rates. Are we definitely headed into recession environment? I mean, I know you you like to mention that we're currently in one.
Well, I mean, like,
Um,
you know, if they're increasing it, then
right,
we're going to see a tremendous hit in the real estate market, and that may have
real estate.
some serious implications about the rest of the markets.
And slowing of rates. I mean, I don't want to be too hopeful in suggesting a decrease, but a slowing.
Um, so I would say that there would be very apprehensive optimism there,
Hmm.
because I don't think that they would lower it. I think they'll
Right.
keep it
Yeah.
at those levels. I don't think they're at the stage that they're going to lower it.
Right.
But if they do lower it, that's a pleasant surprise.
And if we could, focus this towards, sort of traders, right? What if you're watching the FOMC, right, and you were looking for trading opportunities? Let's look at, a bullish example. They're slowing. What can we expect to trade? Where can we see the opportunities?
Well, the opportunities in either direction is going to happen, right?
Right.
Because as a trader, you don't really care which direction the market goes,
Right.
but you do want to care about some of what how the street will actually understand the information and then trade the information. So, and that's why, as a seasoned trader, you've seen this before. You've seen, revenue be up, or you've seen gross profit be up, but the revenue was down and the stock is still down. So, it comes with the territory of just familiarizing yourself around these times, to try to avoid these type of stocks, just because you don't know which way it's going to go, right? I mean,
Right.
they could surprise you in either direction.
Right. I mean, what I guess I'm looking at is, what specific, instruments will be affected. I mean, it's FOMC, so naturally, I'm thinking about the US dollar, right?
Yeah, but I would say even closer to that would be some of the bank stocks,
Bank
which have
stocks.
rallied recently.
Yeah.
Also, I would say the Dow Jones would be much closer associated with the rate statement.
Right. Dow Jones. It's funny you mentioned the banks. I mean, I don't know if you recall a few months ago, there was all this hullabaloo about, banks crashing,
Yeah,
and what's happening in the banking sector, and yet some of the world's biggest banks reporting record, profits.
yes, I'm saying that was but poor planning. SVP Bank, what was it?
Yes, SVB and
Yeah, the
Credit Suisse, you know.
the media loves to make it into like this huge debacle of, it's the end of the world kind of scenario.
Yeah,
It's not. It's happened. It will happen again. It's just poor management.
yeah. And finally, advice for traders out there with, earnings season and FOMC coming up.
So, I mean, there's going to be volatility, and with
Right,
volatility comes responsibility. Okay, so the trend is your friend. Don't fight it. You want to play the sides. Play the sides. Just be careful, because it's much harder to take out money in the summer than to
right.
pull it out during the rest of the year. And I know you guys are having winter right now, but
Yeah,
most of the northern hemisphere, or
yeah,
most
it's
of the
summer right now.
population around the world, is experiencing summer right now. So, all in all, we've had a very decent summer so far, with some reasonable amount of activity in the financial markets. And so, suffice it to say that towards the end of the month, and the beginning of September, we'll see some of the markets coming back to full fledged life.
Awesome. Awesome. That's good news. And on that note, I think we'll end it there. Thank you so much, Fred, for all your awesome advice.
Thank you, Sergio. My pleasure.
Cool. I'll see you on the next one.
Bye.